Welcome to Channel's Business Global with me, Juliana Olayinka from our studios here in London. Over the next half an hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, Britain's energy industry could be headed for a significant shake-up as the country grapples with an unprecedented crisis in the power sector. Wholesale gas prices have spiked across Europe, but Britain has been hit particularly hard. Our business correspondent Simon Pusey will join me in the studio for an update on this developing story. And US President Joe Biden has told the UN General Assembly this week that America will double aid to developing nations vulnerable to the climate crisis, with Africa's CO2 emissions contributing just 4% to the total global amount. I'll be asking Professor Chukwumerije Okereke, an expert in climate change and development, what sustainable strategies the continent can adopt to ensure business is not unfairly hampered by the West's ambitions to cool the climate. He'll be joining me from Enugu, Nigeria. Then later, I'll be asking Sylvia Carrera, the founder and CEO of Goldx, if digital gold is the new physical gold, as a wave of new apps trading the precious metal have emerged during the global lockdowns. But first, as always, let's start the show with business news from here in the UK, where after weeks of speculation, Prime Minister Boris Johnson carried out a sweeping reshuffle of his most senior ministers as part of plans to focus squarely on his domestic levelling up agenda. The promise to reduce inequality and rebalance the economy between the north and the south of the country has been a central message to the Prime Minister since the current government came into power in 2019. 4 ministers have been sacked. The most high-profile change was the demotion of Dominic Raab from Foreign Secretary. He's been moved to Justice Secretary. Liz Truss, the former International Trade Secretary, has replaced him. In other British business news, the country's energy industry could be heading for a significant shake-up as Europe grapples with an unprecedented crisis in the power sector. Britain has been hit particularly hard. High demand for gas and reduced supply are behind a surge in the wholesale prices. Wholesale gas prices have surged 250% since the beginning of the year, including a 70% rise since August. Customers are protected from sudden hikes in wholesale gas prices through the energy price cap, which is the maximum price they can be charged on a standard tariff. Smaller energy providers are battling to stay afloat as price promises to customers are now undeliverable. Well, for more on this, I'm now being joined in the studio by our business correspondent, Simon Pusey. Simon, so what's the update on the ongoing crisis talks?
Yeah, so the government have stepped in. The exact details, we aren't sure yet. They haven't released them, but they have stepped in. Let's just go back and talk about how this came about, because this crisis has really come out of nowhere. I know there's been a lot of other things going on in the world that we've been concentrating on, but wholesale gas prices have risen about 250% in the last year, and 70% of that's come in the last 2 months. And it's not just the UK that's affected. Many European countries, France, Spain, Germany, are all affected by this. I think just the scale of what's happened to the UK is really quite shocking. And the CEO of Ofgem says this may not be a temporary measure and that hundreds of thousands of customers are going to be affected if they haven't been already. So a lot of people are asking why, how has this come about? It seems to be sort of a three-pronged issue. One is the prolonged Northern Hemisphere winter of last winter meant that a lot of gas stocks were used up. So stocks are about 25% below the historic average at that point. Then there were also disruptions of imports piped in from Russia and from Norway for various different reasons. And one of the more interesting ones is the UK uses quite a lot of wind energy. And in 2021, in the last year, we haven't had much wind. I don't remember sort of thinking, oh, it's odd it hasn't been that windy, but it hasn't. If you look at the statistics, wind speeds have been really down in the last year. So a lot of people have turned to gas as a result of that. And I just think, you know, a perfect storm of things have come about to make that happen. And it's had knock-on consequences for the food industry, for example. So we've been reading in the last few days about how the meat production industry is really being crippled by this because they use a lot of CO2 to store meats and to make sure that meat can stay good for a number of days. And the prices of that have gone up massively to the extent that a lot of these places have been closing down. And I mentioned the government stepping in. Well, they seem to have stepped in to give money to a company called CF Industries, which is an American company, which had closed 2 meat packaging factories in the UK. And the government have pretty much given them a loan, I think, to basically say, stay open, we need you, because we're hearing all these horror stories about how we're just a couple of days away from food and drinks running out of stocks. So it is worrying, and I think we are going to have to be paying more for our energy in the very near future. I think a lot of questions are really being asked, why is the UK so affected compared to other countries? Because it seems to be we're paying double, or could be paying double what other countries are paying for our energy. And it'll probably put pressure on the government to look at other resources, for example, nuclear and other ways to make energy, because we can't go on like this, paying some 250% above what we were a year ago.
Thank you, Simon.
Thank you.
To our next topic, US President Joe Biden has told the UN General Assembly this week that America will double aid to developing nations vulnerable to the climate crisis. The announcement brings the pledge to more than $11 billion. Smaller, less wealthy nations have used the 76th General Assembly to voice simmering fury over a worsening climate emergency that threatens the future viability and development of some vulnerable nations. According to the most recent data, Africa contributes just 4% to total CO2 emissions. Well, for more on this, I'm now being joined by Professor Chukwumerije Okereke, an expert in climate change and development. Professor Chukwumerije Okereke, thank you so much for joining me on Channel's Business Global. It's been a busy week. Alongside Climate Week New York City, there was also another diplomatic event, the United Nations General Assembly, and no surprises that US President Joe Biden used his platform to, of course, announce many things. But I think for this discussion, the top headline, of course, is the billions of dollars that America will be donating to poorer nations to help them address climate change issues. What was your analysis of that?
Thanks very much, Juliana, for having me. Well, my first reaction that this is a step in the right direction. America has been lacking in the demonstration of leadership, being, of course, one of the greatest contributors to climate change, both historically, but also currently. You will recall that President Obama made a pledge for, I think, about $4 billion US, which was scrapped by President Trump. And when President Biden became, won his election, some of us wrote quite excitedly about the return of US leadership to climate diplomacy. And some of us have waited to see what concrete actions Biden will take. This goes a long way in building trust, because trust is at a very low level between poor and rich countries, because a lot of promises made in the past have not been kept. America is lacking woefully in terms of demonstration of leadership in terms of climate finance. So this is a step in the right direction. But make no mistake about the fact that this is not nowhere enough of what is needed. Calculations showing about $500 billion by 2050. America, from all the statistics I know, have been lagging behind in pulling their own weight. So yes, this is a step in the right direction, but there are many more questions to be asked. For example, who will profit from this pledge? How will climate finance be defined? What processes will be put in place for accessing those funding? We do know that a lot of pledges made by developed countries are not additional to existing ODA assistance. And this is very problematic. And so there are a lot of questions, not least, of course, whether Congress will approve, but as a gesture of reconciliation, this is a step in the right direction.
Thank you for your assessment there, Professor. And you are a professor, so beg me to ask a pretty basic questions, because I'm not a climate change expert, and I know the vast majority of our viewers aren't either, but you are. What does Africa need to do in practical steps to protect the planet? Because there are lots of people, especially in the diaspora, some leading voices that are asking, or they believe Africa are unfairly likely to bear the brunt for the rising temperature of the planet, when we have emitted less than 4% or about 4% of CO2 emissions. I know there are so many more contributing factors, but what the West are talking about are carbon emissions, and we haven't contributed hardly anything to that.
Absolutely. This is a vital question. Africa contributes the least to global stock of greenhouse gases, especially CO2, but is the most vulnerable continent to climate change. According to some analysis, 4 out of the 10 most climate vulnerable countries are in Africa. You ask, what should Africa do? Africa is already doing a lot. Almost all African countries have submitted their nationally determined contribution, which is a voluntary document that pledges what countries would want to do to tackle climate change. Analysis done by many experts around the world show that unlike a number of other NDCs, nationally determined contributions, Africa's NDCs are quite robust in ambition. Give you a practical example. Nigeria, 20% reduction pledge by 2030 compared to business as usual, and a whopping 47% reduction conditional to international support. The critical question, Juliana, however, is where would the money come from? Nigerian NDC, for example, is costed at 177 billion to implement. Nigeria is already running a huge budgetary deficit. Money is in short supply. Climate impact is increasing. So where would the money come from? Of course, 2 green bonds have been raised. There are, of course, questions about how well they were implemented. But there are no lack of ambition and demonstration of commitment from many African countries that I advise. What they're telling me is that they need the rich countries to step up to the plate, to do their own fair share, to provide support, to rebuild the confidence, to enable African countries to actually take concrete actions. I am not saying by any stretch of imagination that there are not quite a lot that we can do internally in Africa. But for a continent that is emitting so low, we are already pulling our weight, and we need more support from the international community.
Absolutely. Thank you, Prof. Before I let you go, aside COVID, the climate emergency, well, from where I am in London, is the biggest talking point for years. Everybody's talking about it. It doesn't appear as if this is being spoken about enough by African businesses or African policymakers. And if it is, why are we not hearing about it? Is it an emergency on the continent?
It is an emergency, but you are absolutely right that it's not being talked about anywhere near the attention it deserves. That's why I left University of Oxford and ready to come back to Nigeria to see if I can whip up public understanding and knowledge of the emergency, the crisis that is facing us. Make no mistake about it. This is even bigger than COVID. This is the biggest issue, developmental issue facing Africa. And yet, very limited businesses have good understanding of it. Many banks, for example, do not have a climate risk strategy. Many businesses don't even know how much emissions that are implicated in their business activities. We don't have data. Knowledge is broad but shallow. And so there is much more that we can do in this area. But what we have is lack of understanding, partly because the think tanks don't have the capacity, the NGOs and civil society people don't also have the capacity, but primarily because climate change has not translated or doesn't yet translate into electoral gains in this country. Unless and until it becomes an electoral issue, government and businesses will not take it seriously. And so we all have a lot to do to up the game, to broaden the awareness of climate change in this continent.
Absolutely. Professor Chukwumerije Okereke, Director of the Centre for Climate Change and Development at Alex Ekwueme Federal University in Nigeria. So insightful hearing from you, Prof. We definitely got to have you back on Channel's Business Global again very soon. Thank you so much for joining me on the show.
Thank you, Juliana. Thank you.
Coming up on Channel's Business Global, I'll be discussing digital gold with Sylvia Carrasco, the founder and CEO of Goldx, who will be joining me from London, and Bukola Bolarinwa, the senior analyst for West Africa at Control Risks, will be talking me through her firm's recent report, which examines Africa's post-pandemic recovery. See you after the break. Welcome back to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. In a few minutes, I'll be speaking with Sylvia Carrasco, the founder and CEO of Goldx, and Bukola Bolarinwa, the senior analyst for West Africa at Control Risks. But before then, here's some company news for you. The Swedish government has pledged to boost welfare spending by 23 billion Swedish crowns, the equivalent of $2.6 billion, in a budget aimed at reducing social inequality. Sweden has bounced back from COVID-19 quicker than most countries in Europe, and the economy is expected to grow 4.4% this year. JP Morgan has officially launched a new digital bank in the UK. Chase Digital will offer customers 1% cashback on debit card spending for the first year, as well as competitive money management features. The firm will be headquartered at Canary Wharf, and the business has already created 400 jobs. In the States, Chase is one of the largest consumer banks, serving 60 million households, including 55 million digitally active customers. Shares in Universal Music Group surged during its stock market debut on the Euronext Amsterdam Stock Exchange. The listing is now valued at 46 billion euros. UMG is the largest music company in the world and dominates the music industry as part of the big three record labels, alongside Warner Music Group and Sony Music. To our next story now. During the summer, the London-based gold trading app Goldx made huge changes to its business model by becoming a B2B gold trading provider for fintechs and financial institutions. The less volatile asset became a significant safe haven for investors during the pandemic, and nowadays you can buy the precious metal in many different forms. Sylvia Carrasco, the founder and CEO of Goldx, joins me now from London. Sylvia Carrasco, thank you so much for joining me on Channel's Business Global. So it's been a couple of months since you expanded your offering, allowing fintech firms seeking product expansion to use your platform. How's it been going?
It's going very well, Juliana. Actually, it's going much better than I expected. I always thought that we would have a market fit with our product so that other companies would easily offer physical gold to their own clients in an effective and cost-effective way. I didn't expect it would be so well received, and so we're extremely busy. We have a hell of a year ahead of us, but it's confirmation that the product, the gold product, it's something that has been a little, disregarded in certain areas of the world from fintechs, but finally they are actually coming into it.
Absolutely, Sylvia. Goldx are making the fintech CEOs make even more money, and even more money potentially for gold apps like yours, because of course we all know that the precious metal is a safe haven for investors that are trying to shield their cash away from a volatile market. I presume it's been a lucrative, if not interesting, 18 months for your firm.
Yes, I mean, at the time when everybody, at the beginning of the pandemic, I don't know if you remember that one of the main issues people had were the lack of toilet paper in supermarkets. And I usually said that, gold was as popular as toilet paper. We had reached that status because there was, an absolute massive inflow into the physical assets. Why? Because gold has always been there. There isn't an asset class that has lived with humanity. We've been having gold during wars, during pandemias, during all type of catastrophes, also during happy times. So it's proved and tested. And, during this time, actually, physical gold had a problem with liquidity, mainly because of the difficulty of transporting it, because, there was lockdown in all over the world. But it has proved again that it's gone into people's minds, and in certain regions, it's actually been pushed and been put in front of people who said, oh, I remember there was something called Goldx that I used to buy, or people used to own. How can I now buy it effectively and easily? And how can I actually not have to be a millionaire to and get access via those fintechs?
Well, thank you for that gold lesson there, Sylvia Carrasco, the founder and CEO of Goldx. We definitely will be inviting you back on the show to tell us more about those expansion plans. Thank you, Sylvia.
Thank you, Juliana.
Leading global specialist risk consultancy Control Risks, alongside Oxford Economics Africa, have launched the 6th edition of the Africa Risk Reward Index. The report examines the longer-term impact of COVID-19 on the continent. For more on its findings, I'm now being joined by Bukola Bolarinwa, the Senior Analyst for West Africa at Control Risks. She joins me from London. Bukola Bolarinwa, thank you so much for joining me on Channel's Business Global. For those who may not have had the time or the opportunity to read through your recent report, what are some of the standout conclusions?
Thank you very much for having me. So our report is called the Africa Risk Reward Index. And essentially what we looked at is the investment landscape for major African countries, and to really look at the outlook for key trends that are shaping the investment decisions for businesses in these economies over the next kind of few years coming. And a few real things to look at firstly is obviously the pandemic and how that's shaping the economies of different African countries, and how this also presents some opportunities, especially in Africa health tech and biotech. We also look at a theme which we call paying the bill, looking at the innovative solutions to Africa's debt crisis and how some governments are rethinking their finances in ways that offers new opportunities. And finally, a key theme from the report is what we call cooperation, competition, and conflict, and the changing dynamics of military intervention in Africa, especially looking around the security situation in different African countries and how investors can navigate a very complex security landscape.
Absolutely. I wanted to ask about the security situation because, as you said, your report does highlight that. Of course, there are so many successes, including fintech. We've had many of the CEOs on the show over the past 18 months. But would you suggest, or do the findings suggest, that some international investors are put off by Africa's security situation? That, of course, isn't the same across the continent, but is still pretty severe in some pockets.
Yes, definitely. There's no investor that's going to be looking into Africa that isn't going to be assessing the security situation. But the main thing for us, and which we highlight in this report, is really to understand local dynamics and to understand the sector that you're going into. So, for example, if you're a fintech investor, like you've mentioned, your sort of exposure to security risks is very different from, say, if you want to go into a mining operation or an oil and gas operation in a particular region. So it's really about understanding the country, understanding the local dynamics of where it is that you want to work, and being able to create mitigating measures against some of the security risks, no matter the country, and as difficult as some of the security situations can be, investors are still investing and finding ways to work through them.
Absolutely. Before I let you go, Bukola, what are some of the kind of standout countries? We do like to fly the flag of Nigeria on this show, but are there any kind of other places where, you know, you're seeing lots of investor interest?
Yeah, I mean, the standout one is obviously Ethiopia. The economy is opening up over the last kind of few years now with new investments in telecommunications and so on. It's obviously a place as well where the security situation is quite complex, but it is one where we're seeing quite a lot of it in interest. Another one is Zambia, actually, with the recent elections. There is opportunity for reform and rethinking of some of the ways that things have been done there. So it creates new opportunities for investors looking into East Africa.
Well, fascinating insights there. Bukola Bolarinwa, the Senior Analyst for West Africa for Control Risks. Thanks so much for joining me on the show.
Thank you so much for having me.
Well, sadly, that's all we have time for you today, but do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channel's Business Global. Goodbye.